wonderful good afternoon all together. Hi, everyone. Today we are going to talk about how to avoid emotional trading in 6 different ways, including the following topics: the dangers of emotional trading and how to manage risk and money to avoid emotional trading. And then I want to tell you 6 tips to keep your emotions under control. This is me, Markus Gabel. I'm engaged in trading since 22 years. I'm a professional analyst, speaker, trading and life coach, of course, and sure, real trader with real money, and for more than 22 years right now. And if you want to have more information, please visit my homepage, tradingandpersonality.com. I hope you make sure that you stay online until the end of this webinar, because today I want to show you how trading professionals always keep a cool head and how they avoid emotional trading by managing really in a professional way the risk and money management. In this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading on over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5, and of course 4 as well. Finally, if you're watching this on YouTube, remember to like this video, share it with other traders, and subscribe so you will never miss an episode. And yes, that's it, guys. And last but not least, I want to send greetings to my host today, Kitty. Thanks for opening this webinar. I hope you're doing good, and let's make fun next 40 minutes. Guys, I hope you're doing good and you had a great start in this week and you had great success for your own trading. And now it's Wednesday afternoon, it's Marcus time. Yes, and maybe you know me a little bit, and then you know I always talk about the humanity parts or the human parts in trading, because every kind of success, not only trading, even all the other kind of success or businesses outside of trading, everything is based on the human factor. 10% is strategy. What else? What kind of business? Doesn't matter. But 90% is the human part. First of all, let me say thank you. I'm so grateful that you spent your lifetime with me, and I want to do all my best to give you a lot of effort and that you have the edge in your own trading, that you can transfer the theory to the practical part in your own trading. Let's talk about the reality, guys. The human, the trader, and the reality. I don't know how long are you engaged in trading right now. So I'm around 17 years engaged in trading. And I still think trading is a really fascinating business. And it seems too easy to make money when you start with trading. And indeed, it is really easy. Open an account, deposit some money on it, and start with your first trade. And the worst case, what can happen when you start with trading, when you make money with your first trades. Maybe you were wondering why I'm saying that it's the worst case. So let me explain. Because if you make money with your first trades, when you start with trading, then you think, oh, damn it, it's really easy. It's so easy to make money with trading. It's not like the song, you know, it's so easy to fall in love. It's the same like trading. It's so easy to make money with trading. It's not like singing, but it's the same direction, you know. At that moment, let's go a step further. At the moment you lose your first money and you don't get it back, then the emotions you've heard from other traders become reality. So look at the bottom of this slide. There you can read trade responsibility. 79% of retail investors' accounts lose money when trading CFDs with this provider or whatever. kind of provider, doesn't matter, 79%. So there must be a special reason why so many people lose money in trading. And maybe you've heard about other traders when they lost money. So let me tell you a quick story, right? Yesterday in the morning, here on this chair was sitting a really nice guy, 51 years old, married, one beautiful daughter, and he was really, how should I say, busy and confused. And he wanted to visit me in my office to know me in real. He is living really close to me here. And I am asking him, what's about you? What's the problem? Why are you so confused right now? Yes, I'm engaged 20 years in trading, and it was never successful. Okay, I was sitting there, and the guy was sitting there, and I'm looking in his eyes. And, okay, you will try to tell me right now, you are engaged 20 years of trade, years, not days, not weeks, not months, no, 20 years in trading, and you were never successful. Do you want to tell me this part? And he said, yes. Sometimes I won a little bit, then I lost everything, then I won. And today's a Monday, I guess a Monday, and in Germany we have really trouble with a special share. It's called Wirecard. I guess maybe you heard about it. And this guy bought Wirecard on Monday and has said, can you give me one reason why this share is in trouble since one damn year? Why do you bought this share? And he said, oh, I thought it must be happened what I'm thinking. Okay. And then I answered to him and I said, really? You are so important that the market is interesting. What do you think? Is that your kind of thinking the last 20 years? And he said, yes. Okay, now I know the reason why why are you not successful? And then he's talking to me about his little daughter, I guess 7, 8 years old. And he said, my daughter is a little bit angry to me because my daughter will getting two sweet rabbits 2 days tomorrow. And I have to build some stall for that rabbits, but I have no time. I have to trade. And I'm looking really deep in his eyes. And I said to this guy, really? And you want to tell me you are a dad? You prefer red and green candles to your daughter? So red and green candles are so much more important than your daughter? Really? And then he was staring at me and he was almost crying. 51 years old, this guy here in my office. And I told him yesterday morning, it touched me really hard. And I told him, buddy, your lifetime is so limited. Look at this hourglass. It takes 90 minutes. Then I can move it. But when your last grain of sand is fallen down, you cannot move anything. And you want to tell me that red and green candles and some stupid share is much more important than building a stall for the rabbits for your daughter? To make your daughter, your little girl, make happy? Really? And then he said to me, I don't know what I should tell you. Then I said, you know what? I don't want to be your coach. Never. Go out, drive home, look at some videos on YouTube, how you can create this stall for the rabbits for your little girl. And then do what you have to do as a dad, as a real dad. And once if you build and created this stall for your girl, for your little daughter, then you can come back to me. And then I'm thinking about if I want to be your mentor. And then I send him out. The message behind this story is this guy was so emotional in trading. He forgot even his family. Every share, every other thing was more important than family. Guys, that is not correct. That's the biggest bullshit ever. Once if you have to die, and the day will come, and you are 6 feet under, the broker will not hold the last speech. And if you don't stop this bullshit of emotional trading, no one comes to your last day. And this is what I want to talk to you. You have to avoid emotional trading. Even you have a solid strategy, it's gonna be hard to trade with too many emotions. I'm engaged in 70 years in trading right now. I'm a human like you. I'm not better than you, of course not. I'm the same guy like you. And I have my emotions as well. But as a professional, I have to control them. Otherwise, I would be a robot. I'm not a robot. You see, I'm really emotional when I'm talking to you because I want to give you some value for this guy. I want to avoid that you fall into this trap to emotional trading. It will never lead you to any kind of success. After a couple of times, you realize that your mind, like this guy, yes, but he needed 20 years for that. You realize that your mind is not made for trading. We are used to stick to any kind of rules and we expect a positive result again and again and again. Think about your job. You go to your job, you do your job, you become an expert and you get your result. And if you get a positive result, you get your income. So that's the way how our life works. We start with trading and then we assume to handle it in the same way, but we become disappointed. Why? We stick to rules, even you have rules, of course, of your preferred strategy, but we still get different results. Not one time, not 2 times, every single time. You get different results. And this point or this part in your trading is so much confusing. And then as a result, we're gonna act in a normal human way with emotions. And I know it is so hard if you are on the right side of the chart. You see your signal, you know your strategy, you're calculating your risk, and then at that second you push the button. You know one point. I don't know the result. You cannot know. It's just guessing. You cannot know. Nobody knows what will happen on the right side of the chart, even the next second. The only part, you have to stick to your rules, manage your risk, control that. But you cannot know the result before it will happen. And this is why we react in a normal and a human way, because we are humans. Of course, you are not a robot. And it's completely okay, it's completely normal that you react in a normal way, in a human way. Otherwise, you would be a robot, and you are not a robot, of course not. So the dangers of emotional trading, it's normal and it's the human way, is that we take everything personally. But why do we do that? Let me explain a little bit more carefully. In your life, if you make something wrong, or let's think in a positive way, if you do something right, you stick to rules, you are friendly, you do your job, you get a positive result, almost by 100%. And you know, if you make something wrong, you get a punishment. I don't know if you are parents or if you're a dad or if you're a mom, then you have kiddies and the kiddies make something wrong, you get them some punishment. That's normal way to teach them. Okay, you could talk to them, but sometimes better a little bit punishment. So, because we got the same from our parents, right? So I remember my dad. My dad wasn't talking to me. He was hit me a lot of times when I make something wrong. He was not the talking guy. He was the punishment guy. It was not funny in my youth, in my childhood, but yes, it's the past. But I knew that if I make something wrong, I get some punishment. And that's the way we are thinking. And that's the way we are educated. Make something right, you get a positive result. Make something wrong, you get a punishment. Loss is like punishment. That's the way we are thinking, because we are humans. But now, in trading, we think the same. If we got a loss, we are thinking, because it's normal human way, oh, damn it, I make something wrong. Therefore, I get a loss. It's a punishment. If you lose money, it's a kind of feeling of punishment. But let me quote the famous author Alexander Elder. Maybe you know his book. The market doesn't know that you exist. Therefore, you don't have any influence on it. But, and here comes the big but, you can handle your own behavior. That is the only one what you can handle. And this is a quick story of mine. When I started with trading, and I started some of my first trades, I was sitting in front of the PC and I'm feeling so important. I was feeling so important. And I thought to myself, Marcus, now you are in the market. Now you are important. Now you are a man. Now you are important because you have an open trade. And I was expecting that that market should do what I want to do. But that was a big, big failure. Today I know the truth of that word. The market doesn't know that I am existing. The market doesn't know me. Because the alpha and omega, the start and the ending of every kind of trading is in the book map, in the order book. In the order book, you only find 3 rows: buyers, sellers, price. There is no row where you can written in your name. There is no row where you can written the reason why you want to go long or short. The market doesn't know that you exist. So the only thing you can handle is your behavior. And this is one of the most important insights for successful trading. And my teacher, once he taught me, and he wrote in his famous book, this one sentence: we come to trading about money, but we stay about the insights. And in my early stage of my own trading, I asked that guy, what are the insights of trading? I know I want to make money, but what's the real insight? And at that time, almost 20 years ago, he said to me, I cannot say. And I said to him, what? You wrote in his book, we stay about the insights, and why do you can tell me? And he said to me, you have to experience it by yourself. If I could explain to you right now, 20 years ago, but you cannot understand the deeper causes. At that point, I was really frustrated. And to be honest, I was a little bit angry to my mentor at that time. But years ago, I made exactly this kind of experience. And this is one of the experiences. It's one of the insights. The market doesn't know that I'm existing. I only can handle my own behavior. Trading and markets are completely neutral things, and therefore no reason to take anything personally. To avoid emotional trading, we must know the deeper cause of your own behavior, the deeper cause, not the obvious things, the deeper causes. The deeper cause is that we used to think in a normal human way and in money. If you lose your pocket, you don't go home and think by yourself, oh, I lost 3% of my income right now. No, you know exactly how much money you had in your pocket. And now you said, oh, I lost 100 euros on the street or dollars. You think in a money way. Now let me give you some interesting tips how you can keep your emotions under control. First, identify your personality traits. And it's one of the crucial keys for your trading success that you be aware of your own traits and biases. So for example, if you have impulsive tendencies, you need to keep those in check because they can lead you to make rash and ill-advised decisions that have little analytic backing. If you are a little bit impulsive, you have to calm down. This is a story of myself. When I came to trading, around 70 real trading, 70 years ago, I thought from myself, I was really convinced I'm the coolest guy under God's sun on this planet. I thought I'm so balanced and I'm so calm because I was calm at that time. And then I came to trading. And when I threw my first mouse at the wall, and he was splitting 1,000 of pieces, and I have to go to the next market to buy a new one. At that moment, I realized I was everything, but really not balanced. I was everything, but really not calm, because I couldn't understand why I'm sticking to my rules and why I lose money. And that at that time, at that point, I knew I have emotions. I'm really impulsive. So keep in balance this point, really. It's also important to play to your personal strength, like if you are a natural calm or a calculated trader. Find the rules that will fit to you as a person. So we have a lot of listeners this afternoon here in this. Thanks for that, guys, that you spend your time with me. But every single trader is an individual person. You cannot compare from one to the others. I cannot compare my special student and friend Plumman maybe to Abram or to Steve. We cannot compare to each other. Every single trader has its own background, own education, own way to think about special things. The one is more natural calm, the next is more calculated guy. So do you know what kind of strength or weaknesses do you have? If you don't know yet, I have a special advice to you. Ask your wife or ask your girlfriend or if you ask your husband, I'm really sure they can tell you your weaknesses. And if they really love you, they can tell you your strength as well. Ask them, or maybe your best friend, whatever. Those strengths could take advantage of these personality traits during your time at the markets. And you need to control such things in trading. Second one, develop and follow a trading plan. Having a trading plan is paramount to ensuring that you achieve your goals, like in real life too. You cannot reach anything without having a plan. And that's the 4 steps to reach your goals, all your goals. Dream. Do you have a dream? Write it down. Then make a plan. And before you make a plan, set a date. You will never reach any kind of dreams without having a date. Otherwise, it goes far and far and far away. So maybe you have the dream to control your thoughts, to control your emotions, to want to become a successful trader. When? Next year? In 2 years? Tomorrow? Next week? When? Did you ever written it down, this date, to your business plan? Believe me, without this date, you cannot make a plan. You will only dreaming the rest of your life without reaching or achieving your goals. So dream your dream, set a date, then make a plan. How do you want to reach this one? And then break it in single steps every day. And then you know, if you break your rules today, your dream is going far away. To achieve your goal, you have to stick to your plan every day. That's the 4 magic steps, how you can reach your goals. A trading plan could start maybe as simply by saying that you're going to commit swing tradings for hourly charts, and you will never commit more than $100 of your account to any one trade. This is a plan. When do you want to achieve that? As long as you jump from 1 minute to 5 minutes to 1 hour to daily to weekly to this one and this one to shares and forex and commodities and whatever, your goal is really, really far away. But having this kind of plan will help you minimize losses and limit the effect of emotions on your trading, as the rules for opening a closing position are already highlighted for you. As long as you are react emotionally on the right side of the chart, and as long as red and green candles are the highlight of your day, then you will never reach your target. Never. Remember this guy, even he was 51 years old. I don't know, he started a little bit young, with 7 years. He started a little bit late with creating a family. That's not the problem. Age is never the problem. This is the problem. My behavior, my attitude, my abilities, how I'm thinking about that. And as long as red and green candles and a setup is your highlight, and not creating a stall for rabbits for your girlie or for your kiddies, then you will never achieve any kind of goal, because you have a completely wrong habit about that. Believe that, please. I'm talking about experiences. I lost my family and that never came back to me. And this is not a funny part. Tip number 3, have patience. It's absolutely crucial that you have patience with your positions. Acting on emotions like fear can lead you to miss out on a profit by closing a position too early. If I make my own trades like for hourly charts, it's a normal way that I have to wait a couple of weeks. A couple of weeks to achieve my goals, my targets, maybe the point of control. Sometimes it needs a couple of days, but sometimes it takes a couple of weeks. This is kind of patience. When you are looking to enter a trade, it's important to be patient and wait for the opportune moments rather than just jumping into a trade right then and here and there and there. Yes. This is why you need to be patient in trading. First, wait for the opportune right moment, for the right moment when your signals come up, and they will occur. And once, if you started your trade, let the market decide. Let the market decide how much money you will get. Sometimes it takes really, really long time, as long as your target will reach. Be aware of that fact that with every uncontrolled emotion, your goals you want to achieve are getting more and more far away. As I said, your dream, set a date, make your plan, break it down in single steps. But if you miss one step today, your goal will move far away. And now we come to my hourly glass behind here in my back. This is your lifetime. And never forget, your lifetime is limited. Really, it's limited. Think about it. With every single moment which is passing by, your last day will come closer and closer. As long as you are young, you don't think about that. But when you become older and older, sometimes you get sick or you lost some other family members, relatives and something else, then you think about it. Your day comes closer and closer. And if you break your rules today, to achieving your goal is far away, but maybe you will reach it never. What a big waste of your life. Really, it's big wasting of time of your life. Tip number 4, reduce your risk. We grew up with the knowledge that everything costs money. So we start to think in terms of money. And this is the really, really deeper cause why we act emotionally in trading. If you want to control your emotions, you stick to your rules and you plan whatever it takes, Mario Draghi, I love this word, whatever it takes, then you need to reduce your risk. Why? It's not the number of percentage what you make, what you drive so crazy. It's the amount of money beyond that percentage number. The money drives you crazy and not the percentage of your account size, which means we never think in percent. We are humans. We used to think in money. If you lose money, you never think, oh, I lost 1%. You think, damn it, I lost 50 euros. I lost $50. And now you're going to think, how much could I buy with 50 euros or $50? And my wife is crying to me. Yeah. Reduce your risk, guys. Reduce your risk at money with every single trade, and your emotions will be reduced as well. And I know exactly, I know that you think right now, oh, if I reduce my risk money for single trades, oh, my winners are less as well. Yes, that's true. Welcome at the real trading. And let me tell you this big secret. This is the only way to become successful in trading. Reduce your risk. Accept this inevitable thing that less money is a part, in profit is a part of the game. But only if you reduce your risk money, you're able to trade with less emotions. Because not the percentage is responsible for your emotions. The risk money beyond that 1 or 2%. Yeah? Okay. Be adaptable. Please remember that not 2 days on the markets are the same. Very rarely will you experience winning strikes exist, but losing strikes that take place more often. It's a part of the game. Being adaptable can help to limit your emotions and rule out representative and status quo biases, enabling to you assess each situation on its own merits, ensuring that you are pragmatic during your time on the markets. So being adaptable, stick to your rules every time. And here's a quick reminder. Everything, listen please, that's important. Everything comes from you and your own perception. You're on the right side of the chart. Do you remember the pen? Do you remember the pen? This is a pen for you and me. But if a dog comes into the room and I will show the dog this thing, would the dog realize this thing as a pen? I guess not. The dog will come in, would see that thing and would bite on it. I would say, it's a chew toy. It's a chew toy. If this thing would be a pen for both of us, the dog would ride a ladder with his feet and I would bite on it. But for me, it's a pen. For the dog, it's a chew toy. And now, think about it. If I put it there and no one is in the room, no human, no dog, what is this thing in this moment? You would say, I don't know, nothing. True, it's nothing. Because no one is in the room. If the human comes back and see this thing, the human would say, oh, look, a pen. After the dog comes in the room and would see this thing, it would bite on it, and it's a chew toy. So this thing is able to be two things in the same moment. Chew toy for dog and a pen for me. And this is the way how the universe and trading works. If you have a look on your chart, on the right side of the chart, it's only your perception. If a second guy would come in and would have a look at the same chart, he would have a differently opinion. It causes his own perception. Therefore, there's no right or false in trading. It's your own perception. Think about that. And then you can with that deep insight how our universe works and how trading works is the same way. Everything comes from us. Everything. Why? Because you planted it by yourself with your own mind printings. But this is a deeper topic for another time. Last topic, take a break after a loss. Sometimes after a loss, the best thing is go away. Go away, close your trading account for a short while to gather your thoughts, calm down, compose yourself. It's better than rushing into another trade to attempt to regain sum your losses. Thanks, Kitty. The best traders are those that take their losses and use them as a learning opportunity. They will typically trade a few minutes to themselves before going back to the platform, using this time to assess what went wrong for that particular trade in the hope that they might avoid making the same mistake in the future. But don't forget, once if you get a loss and you repeat and you think, oh, I didn't make any kind of failure, I didn't make a mistake, then it's a technical correct loss. And this is part of the game. If you are too confused, please make a break. Close the platform, take a walk, take your family, call a friend or girlfriend or whatever. Take a break. Enjoy your life. Enjoy everything other things, but take a break. Let's make a short conclusion, guys, and don't forget the pen. Every trader is a human being with their own emotions and feelings. Trading can be very confusing, therefore we act like humans with emotions. The biggest danger is to take everything what happens in trading personally. A loss in trading isn't a personal thing. It's not a punishment. Quick reminder, Alexander Elder, the market doesn't know that you exist. You cannot have any kind of influence to the market. If you want to become successful in trading, you must avoid too much emotional trading. You must. There is not another option. You must. And a strong why will help you to achieve all your goals. Because based on a strong why do you want to achieve your goals will give you all this motivation to control your thoughts and your emotions all the time. And the thing with the pen will help you more than other things. Because if you realize that everything comes from you, then you know the right side of the chart is not important. Can all the other guys are looking, I have the same look at the chart, but every human has its own perception. Remind the thing with the pen. Let me invite you guys to our Trading Spotlight community. After this webinar, we will never leave you behind. After this webinar, we share our trades with you, Paul, Jens, and myself, and then come into Trader's Chart. You can see it here. And the only requirement, open your account, a real account at Upmer Markets, put some deposit on it. Must not be so much. And then you can follow us there and we can share your opinions to each other and then we can become successful together. I hope you will enjoy my wonderful partner and congenius partner Jens Klatt on Friday when he is talking about the chaos theory and value at risk, an introduction to the chaos theory and something else on Friday, 26th of June, in 2 days, same time, same spot, and same place, guys. If you have any questions, send it to Admiral Markets about mail, YouTube, and Facebook. Thanks, guys, for spending your time with me. I'm so grateful, and I hope you could get some edge for your own trading. And for me, the most important thing, think about the pen. Everything comes from you and your dreams as well. I wish you a wonderful day. And Katie, thank you. And we'll see each other next week. And be careful about your thoughts. You know, they are the beginning of your actions. See you. Bye-bye.